Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. Holy cow, folks, into the action we go. Markets with a few minutes left of trading. Markets are hitting the lows of the day. Massive sell-off. S&P down 1.8%. But again, that doesn't even spell the story here. Take a look at the NASDAQ 100. All right, this is the big one, down almost 3% on the day. Massive drop there. Technology stocks getting hammered. Amazon down 53. Google's down 130 points, 4.5%. Apple's down 2.5%. Microsoft down 3.6%. And Facebook's down 3.6% as well. So big drops out there, mostly in technology. The market was already kind of trending a little bit lower, but it was choppy sideways. Then we got the Fed minutes, folks. And this was the kicker. The Fed began to talk about letting assets run off their balance sheet. So remember, they're already tapering. They're already talking about raising interest rates in 2022. Now they started to talk about letting assets run off their balance sheet. That is just one more mechanism for tightening, and it is freaking the markets out. The 10-year yield right now, 1.7%. It is coming back in a little bit, which may save the day tomorrow if it pulls back. But right now, folks, this is an epic sell-off. All right. Now, again, we were talking about maybe the markets could get up to that trend line, that upsloping trend line on the Spiders daily and the Qs daily. Not anymore, at least in terms of the chart pattern. Any sort of bullish consolidation that was going on is now negated. It is null and void. All right, let's go back to the Spiders on an intraday basis here, folks. Take a look. We're going to cover everything here. We are hitting a little intraday support on the Spiders. Let's zoom out here and see. There's a gap window here. I got to believe you're going down to gap fill. So you're hitting gap window. I don't know if we'll get there into the end of the day, but I would sure think that we get there tomorrow. There's a gap fill right here. Now, even with this massive sell-off, remember, just like 2 weeks ago, basically just before Christmas, we were down here, and then that Christmas rally took us up here. We then went sideways, consolidating. No longer consolidation, no longer bullish pattern there. And again, markets are taking an absolute demolishing beating here on this trading day. And this is a little bit of a surprise from the Fed, folks. All right, if you looked at what the Fed had been doing, yes, they were being more hawkish, but this is a new caveat to what they've been talking about. And it's certainly causing the market some definite angst out there. All right, taking a look at the daily chart, look at that red candle today. And again, here was your Christmas rally right before Christmas. Then the week between New Year's and Christmas and New Year's was sideways. And then here we have the big sell-off today in the markets. This is the gap fill we just looked at on the Spiders daily chart right there. And again, we'll have to see if it ends up getting there into the close. It certainly looks like it could. I mean, we're selling so quickly here. The volume today, look at that. There's the market close. So we actually didn't quite get there. We could get there tomorrow at the open, probably will, maybe with a gap down. But again, 92 million on the day, 92 million in volume. That is good volume, folks. Good volume. All right, so today, what did I do, folks? So pre-market, I picked up some SE. Again, we added that pre-market. You could have gotten it a little bit less later in the day. That's okay. Again, 1% position on SE. I haven't added to my NET yet, but I do plan on if it gets down to 100 tomorrow. These are beaten down names that will end up bouncing. Take a look at this chart here, folks. Look at the sell-off on NET. It's now pierced this low pivot. You have another major level of support right here at 100. Look at how close that is. That, again, is my next add level based on pure technicals. If we look at SE, folks, take a look at this drop today. It actually had a good bounce off of the lows. And, again, you can see this gap fill was filled today. There's your little bit of a bounce. If it does go lower, there's a couple levels to watch. This would be your first level here at around 165. I don't know if it gets that low. And then down here would be another one at around 157. I don't think, my guess is it bounces in this range and then later on probably gets another move to the downside. But again, it's really remarkable. These some of the highest flyers in 2021 started to sell off even before year end, as if the institutions probably, they were the smart ones unloading while the small investor was kind of looking at it, still holding on. And now, again, now you're seeing some of the panic coming out as the markets are selling harder. One of the bright spots today was Alibaba, which ended higher on the day. Early in the day, the Chinese stocks were doing really, really well, but the downdraft in the market that's just too much. So bottom line is, I liked the performance early in the Chinese stocks. Again, it's just hard to fight a battle when there's that much selling pressure and that much fear and panic after the Fed comes out. And again, most of them ended lower on the day, but again, relatively minor compared to a lot of other names. I'm keeping an eye on stocks like Square. Take a look at Square, guys. Big level coming up on Square. This is another potential day trade bounce, and this is the type of market I love. I can't even, I literally get excited coming to work every single morning when we have this type of volatility. Not only is day trading awesome, but also the swing trading, the opportunities when you're getting stocks that were $300 and they're now $175 a matter of a month later. Those type of drops, when they get a bounce, you'll see $30 to $50 bounces potentially in those stocks. And again, the idea is slowly accumulate 1%, add another 1%, wait for that bounce. It will come. And then get the bounce and get the hell out. All right? Because if we're going into a bear market, you got to be in and out, essentially. All right? Now, I hope you guys all understand, right? So, going into year-end, what did I do? I sold my VXX, used it to offset some of the big gains from 2021. And what did I do? I picked up UVXY. All right? Let's take a look at UVXY today. And I'm bringing that up. Look at that, up 12%. Beautiful move. And that's just beginning, folks, in my opinion. That's not even a big move for the VIX. Not even a big move. So bottom line is, this is why there was a method to my madness as I kind of talked you guys through into the end of the year with taking a few positions off to utilize for tax loss purposes. But then I made sure that there were specific stocks or ETFs that I could buy that would still give me that same exposure. SMH was another one. And look at the SMH today, down 3.5%. Beautiful fall on that. And again, at some point, the SMH is easily going down here. All right, and we saw NVIDIA today getting pounded. Beautiful fall on NVIDIA. NVIDIA should fill this gap maybe as early as tomorrow. We could see that gap get filled there. And again, that will be a very pretty level there. Although eventually, by the way, NVIDIA is going down here. I mean, this is where NVIDIA is eventually going. But you'll get a bounce right at this gap fill, I'm sure, especially if we hit that as early as tomorrow. All right, so wow. I mean, it's just, remarkable price action. Again, market's just getting absolutely annihilated. There's some stocks out there that are getting very interesting. Take a look at Fubo. Fubo's down to this level of support, which it already was over here, so I'm not a buyer yet. But at some point, I am going to be looking at this. There's going to be a level of interest. My guess is there's a level right here on Fubo around $12.20 to $12.15 that looks really interesting as well. And again, that would be my level there. Viacom was up quite a bit early in the day, and same thing. It just had a lot of trouble. You can see it kind of kissed a little resistance level. And then with the market being down as much as it was today, it's just hard for almost any stock. I mean, any stock that ekes out a gain today, you got to tip your cap to. Like Alibaba, I mean, especially as bad as the Chinese stocks have performed, good job. Actually, Didi, another Chinese stock, the ride-hailing stock there, actually eked out a tiny gain too. YY eked out a gain today as well. But again, we saw IQ down 3%. A lot of them were down, 2, 1, 2, 3%. Baidu was down 1.8%, although that was positive at one point today before the kind of the end-of-day panic sell-off there. All right. Again, this type of action breeds opportunity. This is where you start making your list for the bounce. So again, my list has, obviously add to net, add to SE. We've already started small positions there. Hopefully they dip, it doesn't necessarily have to, but if it does dip, that's fine with us, right? We don't care. Let them flush more. The more they flush, the bigger the bounce. That's the way you have to look at it. That's why you start with smaller positions there. You look at other stocks like Square. I love Square. Square's a great company. It just has to get down to the right level, all right? And again, there's even going to be a level where I'm going to pick up the Bitcoin ETF. Look at the Bitcoin ETF today, getting smoked. Bitcoin again. Let's go to that chart right now just because we got so much to talk about. We'll take care of that one right now. Let me flip over to that. Take a look here, guys. And again, Bitcoin, beautiful little drop right here. Here's your levels. Here was your support level. Look at that break point right now. First support's going to be this level here around 42,000. There is a neckline of the head and shoulders just above 42,000, but it's all right in that same area. Next support is going to be around 40,000 on Bitcoin. Bitcoin gets to 40,000, it should bounce. should get a decent bounce there. I don't think it's going to be the longer-term low. I went on Yahoo Finance today, and I basically said, hey, listen, gold's going to be, basically everything I told you guys, I said on that interview today, where, gold's going to be the best performer, all right? Crypto and stocks are going to be lower on the year, and ultimately I think the dot-com effect is you're going to see the crypto have its dot-com moment or dot-com year over the next year to 2 years. So 2022 into 2023, I think you have that dot-com flush out, where you see, again, 95% of the cryptos go bust. And, whatever's left is going to be gold. I mean, literally, it's going to be amazing stuff, but it's got to happen. You got to have it. I mean, I still can't get over someone, Jeffrey Gunlock, I was listening to him today, and he was talking about how, at least with Bitcoin, it started at, a few dollars, and then it went to 1,000, and then it, went to 1,300, then it pulled back, and then, over the course of, 13, since 2009, we're in 2021, so I guess that's 11, basically 12 years now, 2022, crap, we're in 2022 already, so, 12 years or whatever it's been, since Bitcoin debuted, and it hit 69,000. Okay, that's an amazing move. But if you look at like NFTs, which is a perfect example of bubbles, NFTs basically went from zero in a matter of months to like millions. I mean, it's just incredible. And that again is absolute froth. And by the way, it's the Fed. Fed caused it. I mean, listen, each person has to take responsibility for their own investments, but the fact that asset bubbles could get where they were, I mean, and when you flood the market with money, that's what's going to happen. Cheap interest rates or low interest rates, which means cheap money, you're going to inflate assets. That's what's going to happen. Now the Fed actually finally realized. By the way, you guys, I still remember a year ago screaming at the top of my lungs saying what the Fed is doing is insane. Inflation's not going to be transitory. And now here the Fed is like, we're getting a little nervous here about inflation. It's not as transitory. It's not transitory, I don't know. What can you do? And by the way, no, for those of you thinking I should be on the Fed, hell no. Not is something that I would ever want to be in charge of. I love what I do now, and I fully intend to enjoy doing this going forward. Just like I would never want to be in politics. Not a day in my life. All right. In any case, we'll take a look here. Let's flip back, guys. Let's flip back to other charts as we go back to the stock charts. I will continue to make my list for what I want to buy. Again, Microsoft. Take a look at this drop on Microsoft, guys. This is where Microsoft's going, by the way. This is going to be a great day trading level, too, if it hits tomorrow. I mean, this area right in here, I would say right around 310. It's not that far away. I mean, the stock was down over $12 today. Only has to drop another 6 and change tomorrow to get there. I mean, that is going to be a good day trading level. And probably, honestly, a swing trade bounce, although there's a chance it could go as low as here. Again, I still have my short in Microsoft. We're barely out of the money now at this point. But even the bounces, they're just selling opportunities. All right? I screamed about this to you guys, and I know you guys understand. I wish the world would take a hint. But, when you have Microsoft trading at like a 30-plus PE ratio, Apple trading at like a 30-plus PE, I mean, these are trillion now. Apple hit $3 trillion. By the way, do you think it's a coincidence that Apple tagged that even number? If you know your even numbers, and then all of a sudden we're seeing a pullback on Apple? No, it's not a coincidence at all. So, all these things coordinated. You can't have stocks. I mean, Costco was one I really railed against. Crocs I railed against. Crocs at least has come in, right? I mean, we've seen Crocs really come in here sharply. Look at the drop on Crocs over the last, month or month and a half. Bottomed out here. I think it's actually going to go down there again. I think even you'll see a little bit of a lower move here. But eventually Crocs, I think, down here is more fair value. But Costco, nice little sell today. But still, I mean, this has you can't tell me this is worth a 40 PE. As much as I love the company and I go to their stores, it's still not worth 40 PE, forward PE. No way. Not with Fed tightening, with Fed reducing, with whatever the Fed's doing here. Now, listen, let's be fair. Is the Fed actually going to fully raise rates? No, because the market. So the Fed will likely finish tapering. I believe that. But then the market will throw their hissy fit like they did in 2018, and ultimately, what's going to happen? The Fed is going to back off. And so, yeah, maybe you'll get 1, maybe 2 interest rate hikes this year. But ultimately, the Fed will just back off like they always do and give in to the market, because the problem is the Fed has a dual mandate. And the dual mandate literally means that they can never play super hardball with the market and give the market the medicine it deserves. Instead, they got to feed it the candy, the drugs, whatever you want to call it, and let the spoiled child be the spoiled child. Because again, as soon as you cause a drop in the stock market of like 20%, which by the way, last year we were up like 20% plus. So, but as soon as you get that drop, you're going to see unemployment rise because the wealth effect gets sucked away. People spend less money. Less money means less buying goods, which means less, in the chain of things of production, which means layoffs and all these other things. And as soon as unemployment goes up, the Fed has to say, oh, well, our dual mandate says you got to keep unemployment low. So now we got to figure out ways to stimulate the economy again. And, it's insane. The demise of the Fed, and I've said that the Fed will be no longer in existence down the line, but the demise of the Fed started in 1977 when they got that dual mandate. And they were given an impossible task. If I was on it at that point, I would have said, sorry guys, that's not the way it should be done. You should create a different entity. We have to do what's healthy for the system versus doing what just keeps people employed nonstop, because eventually that's unavoidably, it's going to create a situation, a crash type scenario. All right. In any case, guys, let's go back to the charts here. GLD down 50 cents on the day. Nice gap up on gold did come in. Still in the channel. Still in the wedge. Nothing changes here. Gold really looking pretty good right now. Even with the down day today, if you look at the fall in some of these assets that you're starting to see, doesn't look too shabby here. And it hasn't even broken out yet. All right. It will break out, but again, watch for that inflation data to still be very, very hot, and that's where you're going to really start to see, in my opinion, gold moving. Plus, the big move in gold is likely going to come when the Fed starts to back off from hiking interest rates, right? So, maybe they hike in April, May, whatever it is, a little bit, but as soon as the economy weakens too much and they back off, gold is going to rip. That's going to be a time, because basically what that's going to signal is that the Fed is choosing to ignore inflation in terms of keeping people employed. And it's going to mean that you're going to have long-term high inflation, which makes sense, right? Not to go off on another freaking tangent here, but when you have inflation artificial, for 20 plus years, right? Going back to basically the early 2000s, inflation was very, very low. 2% or under. We know that, right? And the Fed has been trying to stimulate inflation for so long. Well, when you have a period that's well under long-term average, chances are you're going to eventually have a period that's well over the average. If you think about a trend line and how things work, just the nature of how things work. All right. So again, don't be surprised by that. Protect yourself. We know that. As traders, we're fine. We're in and we're out. Again, like a day like today, I'm like, oh, well, our shorts are doing really well. And, oh, look at that. Alibaba's up and, things overall not getting hammered too much. We can play positions and bounces and so forth. So we're going to outperform inflation 100 times over. But in terms of other assets, yeah, gold, eventually crypto, eventually Bitcoin, just not here, in my opinion. All right, looking at silver real quick here, folks. See what silver's got in store for us as I kind of click through. Let me see what else we got here. Yeah, silver, a little bit of a pullback there. Nothing crazy in this chart at this point. So, yeah, nothing new. Again, decent choppy sideways consolidation on that. And then oil today actually eked out a little bit of a well, it basically closed negative on the day, but it was looking good early on like gold, and then it kind of fell apart. So again, maybe the Fed being more aggressive is going to, people are worried that it's going to, the supply, or I should say the demand may get eroded in oil, and that could bring it down as well. Either way, the chart tells me down on oil. That's the way I'm positioned. All right, you guys have a wonderful, wonderful rest of your day. Thank you, as always. Take care.